folks, Dan Frio here, the mortgage update, the rate update. Today we're going to go over rates, where I'm at versus everybody else in the market. And I want to just say thanks to all our clients right now. I know we're getting inundated with clients. I greatly appreciate it. It's taken about 60 days or a little bit more to get you closed. I'm going to show you that it's worth it, though. I'm going to show you in the system that we basically have the best rates out there in the market. We had a meeting and it's like, okay, do we raise rates to slow down the flow so we can keep up? And it was basically a consensus vote saying no. Let's be upfront with the clients and just say, it's going to take us maybe 60 days or maybe a little bit more to get you closed, but we'll lock you in at that rate. I'm eating all the rate lock extensions. So what happens is, a lot of you, we lock you in for 60 days. I promise you that rate that I would get you. If we can't close you in time, I'm eating the cost. So it's not affecting you at all. I apologize. It might take a little bit longer. We're doing everything we can. We're working around the clock. Believe it or not, you could probably email me at 10 o'clock at night and I'll respond. And those that are saying, Dan, you're ghosting me, I'm not ghosting you. I can promise you. Just email me. I respond to every email. It's hard for me when you call in. It goes to a database. I pick up a lot of times if I have the time. Many times it'll go to one of my advisors. My advisors, all the files go through me for my approval. I approve the rates, the fees, and I double check the programs that we're putting you into. So you don't have to worry about that. And I have your back on this because, as you see, every day, all day, I'm watching rates so you get locked in at the best rate in town. So that being said, let's get to what happened today with MBSs. I'm going to go over that briefly because I do that every day, and then I'm going to go over where my rates compare to everybody else. So here is where we are. Why people follow me is this particular number right here. This is what's happening with MBSs. I watched my video last night, and I reference MBSs, but I kind of just ramble about, MBSs are up or down. What is this? Well, what happens is there's a bond that trades out in the market. It's full of mortgages, and that bond determines mortgage rates, okay? And this number right here is what's happening to the price of the bond. And in its easiest forms, and I say this all the time, up or green is good. Up and green mean rates are coming down. As the prices of a bond go up, it means mortgage rates are coming down. So we love when it's green. We hate when it's red. So we don't like red. So as you see, we had a green number today. 3 is a good number. At least it's green. Would you rather have the stock market up 5 or down 100? I'll take the up 5. So basically that's what this is. It's not enough to move the market. So I keep saying, the Fed is doing a fantastic job of stabilizing the market, and we can see the trend that's been happening over the last couple weeks. And this is more than a couple weeks, but hold on one second. I apologize. I got to click this. And you see, look, there's been nothing but stability in the market lately. And I see that going or running right now until up to the election or right before the election. At that point, there's going to be some bumps in the road. You can mark my word on that one. In the market, the Dow was up a little bit today, 140. That's good news. Other great news came in regards to the housing market. That's all good, but I don't want to waste your time on that. I want to show you guys how my rates compare to basically everybody else or all the big players in the market. That's the best way I can explain that. All right. So what I did today is I'm saying, okay, I'm just doing a pure refinance. You're looking to refinance and you don't want any more money. You don't really want to do anything. You're just saying, Dan, I want to take advantage of these rates. I don't care. I kind of want to stretch out my loan back to a 30-year term. I just want to drive down my payments. Why? Well, I'm inundated with credit card debt right now, but I really don't want to put my credit card debt on this. If I can skip 1 or 2 mortgage payments and then I can save $200, $300, $400 a month, I can drive down or pay off my car in a year or two and then start plunking money on my credit cards. Or, I got kids that are ready to go to school in the spring, the fall, whatever. It's coming around the corner a year from now or whatever. I had some neighbors that they have children going to school in about a year or two. They're like, we want to take advantage of these right now. The savings, we're going to drive down some of our credit card debt. And then, we'll be a little bit more in a better position for when the kids go to college. So long-term plans, long-term. And I try to say that too, if I can get you a rate at 2.875, and I can close you in 2 or 3 months. Or somebody else is giving you 3.25 and charging you an extra $2,000, but they can close you in 30 days. Maybe in 30, 60-day window, that deal to you is like, I just want to get it over with. But look at the savings after a year, 2, 3, 4. You're going to kick yourself in the head 2, 3 years down the road saying, I could have saved $2 or $3,000. I didn't have to finance that into my loan. And I would have saved an extra $50, $60 a month. And that adds up over time. So that's where, think long term. Okay, so now let's get to it. The parameters behind this loan right now that I'm doing is a rate and term refinance. Now, these are my numbers. I already plugged those in, but I just want to show you, and I'm going to try to drive down or zoom this up as much as I can to show you the parameters that we're looking at. And I'm going to do mine first, and then we're going to look at everybody else's. So I have a $250,000 loan. Our average loan right now is about $290,000 on a $350,000 property. That's a 71% what we call loan to value, and we discuss that. I discuss it a lot. It's basic, simple terms. Don't think of it, that's banking terms. No, loan to value is the loan amount divided by the value of the home. So if you take $250 divided by $350, you get 71.43%. Pretty simple. I go in here and I say, I want to do just basically, we're changing one of two things. We're changing your rate or your term. Okay, or we could do both. We can shorten your term and reduce your rate. But most of the time, in this case, we're looking at what can we do if we just want to do a rate and term refinance and go back to a 30-year term and take advantage of the lowest possible rates possible. So if you look at it, anybody that closed in the last 2 years, 3 years, you're probably at least 1 full percent lower today than where you were previously. So that's why you might want to look into it. If you want to, a lot of times what I do is I say, what, are you comfortable with the payment? You might say yeah or no. You might come back and say, yeah, and I just want the lowest payment possible. Or you might come back and say, yeah, I'm comfortable with the payment. We'll try to derive what term we can reduce you to keep the same payment. We might be able to say, we can cut off 6 years of your term with the same payment. That'd be fantastic. But in this case, we just want to drive down that payment as low as we possibly can. So that being said, I put in it's a rate and term refinance. Credit score is 740. You peak out at 740. So those that are seeking an 800 credit score, if you're looking for a mortgage only, for your credit scores, 740 is your capped out. That is the best rate in town. I basically put in the address and everything else. So then I click a 30-year term, conventional financing, which is conforming, we call it, and you click submit. Now I give everybody, normally in most cases, an $850 to $895 credit. Keep that in mind. So I'm going to click, here's my conforming rates today. And you're going to see some numbers here, and I'll try to make this as simple as I can. I'll try to blow it up. Here's the interest rates right here. Okay. Here is, let's not look at this column here. This is what your payment would be, principal and interest. And then now you have positive numbers and negative numbers in regards to like a percentage, and then you have actually dollar figures here. So what this means is, and I'm going to break it down, at a 3% rate, you would get a $782 credit. A negative is a credit back to you. Think of it as a rebate check. Okay? At 2.99, you're going to get $608 rebate check. Remember, we're always playing with a factor of about $800. At 2.875, it would cost you $575. We're going to give you approximately an $850 credit, so you would be able to get the 2.875 rate. That's where you would be. So right now, our benchmark is me at 2.875. No points and not a whole bunch of junk stuff that people throw in there. So now let's start scanning through. And I use these same companies because all their rates are published all over the place, and they're the country's biggest mortgage companies. So we go to Bank of America. Everybody knows Bank of America. I put in 250 loan amount, 350 value, zip code, and update. Now they don't really give you the ability to put in credit scores or anything. So we'll look down below and look at the assumptions here in a second on what that is. But their rate is 3.125 with 0.874 in points. Now, how do you figure out what this cost is? Well, basically, 0.874 points is 0.874 times your loan amount. So we have a $250,000 loan amount times 0.874% equals, it would cost you $2,185. You'd have to pay Bank of America. That isn't including their underwriting fee and all their closing fees. You would have to pay that to get that interest rate. So at mine, again, the benchmark, 2.875, paying nothing for that rate. You go down here and the assumptions are, let's see if that gives us any fees, a 740 credit score, which is good. Needless to say, I clobber this one, okay? Let's go to the next one, guaranteed rate. Big company in Chicago, and I think throughout the country, but I put in their parameters 350 right here, 250 loan, go all through the thing, and their rate is 2.99. So 2.99 with an APR 3.105. So their rate's 2.99. Lender cost $1,290. Okay, we beat it. We beat it. You go to the next one. This is Wells Fargo. Now, Wells Fargo, they have all kind of mumbo jumbo that confuses the heck out of everybody. And I had a client yesterday call me from New York, and she was getting hosed by Wells Fargo. And that being said, I'm just going to go through their parameters right here. They're costing you automatically a 0.5% right here. You can see it, and I'll blow it up as much as I can. They're charging you 0.5 point. Again, 0.5 point is take your $250,000 times 0.5. That's what that comes to be, 0.5. And then you had to hit the percent sign. Equals $1,250 to get a rate of 3.375. I beat that by 0.5% with no cost to you for that rate. Okay, so that's where we are there. And then we are at Bankrate Com. This scans the whole country and finds lenders all over the country that's advertising on their website to show you, hey guys, here's where our rates are and here's what we could do for you. So refinance, 350 loan amount, 350 home value, 250 loan amount, credit score, 30-year term. You scroll down, 2.875, and that is coming with points, no points. Awesome. So I am equal to that company right there. I don't know if you've heard of them. I have not heard of them, but I equal the best rate in the country there and there. Okay, so I would be equivalent to the best rate in the entire country. The next one, it goes Amerisave, 2.5. Oh, Dan, that beats your rate. Yeah, if you want to spend $4,625 in fees. Now, I wouldn't, but that's me. So you go through the rest of them, and I beat everybody. So I am tied with two other companies in the whole country for the best refinance rates around. So I'll leave it at that. That is today's mortgage update or rate update. If you like what you see, all I ask you to do is one thing. Here's what I ask all the people that watch me. I say, you know what, if you want to check and see what I can do, always, like you would with a doctor, get a second opinion. So if you're out there right now and you got a pre-approval some other country or some other company, and I get probably 10 or 20 of these a day, and there's companies out there I've never even heard of. Be careful when it comes to that. The next thing is send me what's called your loan estimate or your fee worksheet. They have to send you one of both of those. You have to have an application basically in for us to be able to send you out any documentation such as this. So, but if you already did, send me that to me. My name is Dan Frio, DANFRIO. Okay, and why I say that, I'll give you my email address in a second. Email me. I promise you, I will email you back. So if you call, there's a good chance I'll answer. I know for a fact you'll get the phone will be answered. I have, I think, 12 different people in a call center. They're loan officers of mine, and they'll take your application. They'll work on my behalf as the mediator, and then they'll come to me, and I'll go over everything with them to make sure you're getting into the right program, the perfect rate with the least amount of fees possible. Okay, so here's the best way to do this is you can call us. If you'd like to call, you can reach us at 844-775-LOAN. That's 844-775-5626. I'd love for you to follow me on any of these social medias. I'm on all of these, and I post this YouTube videos on almost everything here, and I post updates and many things on these channels to just educate you guys. But again, remember, my name is Dan Frio, so you can reach me at dfrio, which is Frio, at preferredrate.com. That's my email address. And I'm trying to make it short and sweet so I don't lose you guys. So that's it for today. I just showed you how you can refinance with me at the lowest rates in the country. And like I said, we're trying our hardest. Think long-term, not short-term. I promise you we'll get you through the system. It might take us 2 months or maybe a little bit longer, but you're in good hands. I promise you you'll be taken care of, and we're doing the best we can to make that happen. So take care. God bless. I hope to hear from you. Either call, email, or reach out to us any way you want to, social media, and I'll make sure that we at least get back with you with a quote and take it from there. So God bless. Take care. Have a great night. See you tomorrow.